A bank reconciliation is really a company's best way of improving internal controls over its cash. If you keep a checkbook register, you always know what you think your balance is. But does that agree with what the bank says? Usually not. And there are reasons, because there are timing differences between when something is recorded on your books and when it shows up at the bank. You may know about something that the bank doesn't know about, or the bank may know about something that you don't know about. And so we have to reconcile what we show as being our cash balance to what the bank shows. Now, when we talk about it personally, we think about our checkbook register because that's where we keep up with how much cash we have. But from a company standpoint, when we refer to the books, we're really talking about the cash account and their general ledger. We know per our books what we have in terms of cash. And when I say cash, I'm talking about our checking account. The bank gives us information, and we need to bring those two then into agreement. We're going to make what we call adjustments. And the key is we're going to make an adjustment to whoever is wrong about an item. If our books are wrong, it will be an adjustment to our books. If the bank is wrong, it's going to be an adjustment to the bank side of the reconciliation. So when we go over items, I will consistently ask you, who is wrong about this item? Is the bank wrong or are the books wrong? Here's a sample of what one's going to look like. We're going to have the balance per the bank. We're going to add some things. We're going to subtract some things to get an adjusted balance per the bank. We have a balance per the books. We're going to add some things. We're going to subtract some things to get an adjusted balance per the books. When we finish, the adjusted balance per the bank and the adjusted balance per the books should be the same. Now, here's the most important thing I'm going to tell you about the bank reconciliation is it has two parts. Do you see there is a bank part and then there is the books part? As much as I may say this over and over again, when it comes test time, I'll normally get about 3 students every semester who, when I ask for a bank reconciliation, they do the bank part only. That is half of it. That is half of it. And it may be a lovely half, but it's only half. Okay, so when I ask you to prepare a bank reconciliation, you need to remember there's a bank part and there is a book part, and you have to do both pieces of those in. Here's an example. This one is not on your handout, but let's just mention it briefly. Notice we have a balance per the bank. We're going to add one item there, and then we are subtracting 2 items, and we get an adjusted balance per the bank of $26.31. We have a balance per the books. We had an item to add. We had 3 items to subtract. We get an adjusted balance per the books of $26.31, which is the same as the adjusted balance per the bank. That's the way it ought to end up. We ought to end up with the same adjusted balance in. All right, let's talk about specific adjustments. The adjustments to the books would be when the books are wrong about an item. The bank knows about something and we don't know about it yet. The bank knows about it and we don't know about it yet. Now, we do have to be careful when the bank uses the word debit or credit. I have some students back in Chapter 2 where this blows their mind. Because are you happy when the bank debits your account or credits your account? Credits it, because when they credit your account, that means they're putting money into your account. Doesn't that seem exactly the opposite of what I told you back in Chapter 2? Let's talk for just a minute about why the bank seems to do everything backwards. They really don't, but they seem to. Edna brings $100 to my bank. I'm the bank. She's the customer. She makes a $100 deposit. Okay, I am the bank. What do I have more of?
Cash.
More cash. Cash is an asset. Assets go up with a debit. So I'm going to debit cash. With that asset go up. Is that my money to keep? No. I owe it back to Edna, right? What does that sound like? I got some money, but I owe it to somebody else? Payable, a liability. I don't know what the bank actually calls it. I'm just called liability to Edna. And when I credit a liability, I make it go up. So when the bank credits your account, they're not talking about on your books with your cash account. They are talking about their liability account for what they owe to the customer. They owe the customer more. So when they credit your account, you're happy because you have more. The bank owes you more. Their liability to you has increased. Careful when they use the word debit or credit. What adjustments do we add to the books? Things that the bank has correctly recorded as making my balance go up. We don't have them on my books yet. That would include if we earn interest on my account. You have not made an entry on your books yet to make your balance go up, because you didn't know, is it going to be 2 cents this month or 3 cents based upon the interest rates that we have on checking accounts. You didn't know what the amount was going to be, so you have not made that entry yet. The bank has made it already, though. They've made your balance go up. The next one is one that I don't think probably we individually would encounter, but I might have a note receivable outstanding. Now, remember what a note receivable is. Somebody owes me money and they sign a promissory note. When that note matures, that person's supposed to pay me, right? The face value plus some interest we'll talk about. Well, maybe I am not an expert at collecting a promissory note. I've never done it before. I don't know how to do it. So I might contact my banker, because they know a lot more about stuff like that, and they might collect that note for me and put the money into my account. So that's the assumption. They have collected that outstanding promissory note for me, put the money into my account. I didn't know they've done it already, so I have not made that entry on my books yet. A third thing we would add would be entries we have made on our books where we made an error and it understated my balance on our books. So an error we made that understated the cash balance. For example, what if I wrote a check for $10? But when I put it down in the general ledger, I put it down as if it were for $100. I made my balance on my books go down by 100. I should have only made it go down by 10. I made it go down by too much. How am I going to fix the difference? I'm going to add it back then. Why do we add these? The bank has correctly recorded these items as increasing our balance at the bank. We don't have them on my books yet. What do we subtract from the book balance? Things that the bank has correctly recorded as reducing my balance, but we don't know about them yet. We don't have them on my books yet. Bank service charges. Maybe the bank charges me a fee each month. I have not made the entry on my books yet because I didn't know what the amount was going to be this month. The bank has correctly taken that money out of my account. I don't have it on my books yet. What do we mean by NSF checks? Non-sufficient funds checks. Rubber checks, checks that bounce. Now the assumption here is not that we are writing bad checks. We would not teach you how to account for writing bad checks. The assumption here is that someone, a customer, wrote a check to you, you deposited it at the bank, and then you found out that the check was no good. It bounced. What does the bank do? They immediately take that money back out of your account. We haven't made the entry on my books yet because we didn't know the check was no good. We also would subtract from our books errors we made that overstated the balance on my books. What if I made a $10 deposit, but when I put it in the general ledger, I accidentally wrote it down as if it were 100. On my books, I made my balance go up by 100. I should have only made it go up by 10. Take that $90 difference in. We need to subtract it because we have overstated our balance. Why do we subtract these items? Well, the bank has correctly recorded these items as reducing my balance. I don't have them showing on my books yet. How about adjustments to the bank? That will be where the bank is wrong about an item. We know about something and the bank doesn't know about it yet. What do we add to the bank balance? Items we know about that make my bank balance go up and the bank doesn't know about it yet. Items that we have recorded on our books that make the balance go up but the bank does not know about them yet. The most common one we see there is something called deposits in transit. Now, many, not all banks, but many banks' day ends at like 1 or 2 p.m. You might have noticed that before. There might be a sign there at the bank that says any deposit made after 2 p.m. is not going to be credited till the next day. That used to be very common. It's not as common anymore. So what if on the last day of the year, on December 31st, I went to the bank and I made a deposit at 4 p.m. When I get my bank statement that cuts off on December 31st, is it going to show that deposit being made? No. So a deposit in transit is a deposit that I made that hasn't yet shown up on the bank statement. What does it mean if something is in transit? It's on process. It's on the way. The other item we would add to the bank balance would be an error the bank made that understated cash at the bank. What if someone else wrote a check and those silly people at the bank took it out of my account instead of the other person's account? Well, that would make my balance go down. What would I do? Well, I'd probably pick up the phone and I would call them and they would fix that. And next month, what would they do? When on my bank statement arrives next month, I'm going to see that it has gone back up. Why do we add these? Well, when these items show up next month at the bank, they're going to make my balance go up. Finally, what do I subtract from the bank balance? Things that I have already recorded on my books that make my balance go down. The bank doesn't know about them yet. The most common one you'll always see is something called outstanding checks. Outstanding checks are checks that I wrote that haven't cleared the bank yet. But outstanding checks are checks that I wrote that haven't cleared the bank yet. The other thing that we would subtract from the bank balance would be if the bank made a mistake and they put money into my account that they shouldn't have. What if someone else made a deposit, but those people at the bank accidentally put it into my account? Well, being the honest people that you are, I'm sure the next day you're going to pick up the phone and call the bank and tell them about that also, right? And what are they going to do? They're going to come and take that money then out of my account then. So why do we subtract these from the bank? Well, when these items show up next month, they're going to make my bank balance go down. Notice I mentioned errors on both parts. We can have mistakes on our books, which will be shown on the book side of the reconciliation. We can have errors made by the bank, which are going to show on the bank side. We're going to do a bank reconciliation. Now, the first thing I want you to notice is that up top I'm going to give you data. Below that, you see the form for the reconciliation. What's the first section of that form for? The bank or the books? The bank. And what is the second section of that form for? The books. Now, folks, to do a bank reconciliation, you got to do both parts. Just because it's a bank reconciliation, if you just do the bank part, guess what? You're going to get about a 30, and I don't want that to happen. You have to do both parts to it. Now, I've given you some items for starters. I tell you that the balance per the bank is $4,000. All right, so do you see below where I filled that in for you on the bank side? I've already filled that in. Balance per the books, again, $1,500. Do you see where I filled that in on the book side for you? The next item is a note and interest collected by the bank for Barney. Somebody owed Barney some money, had signed a promissory note. So Barney had a note receivable, and you know, he's not the sharpest knife in the drawer. He really didn't know how to go about collecting that. So he went to the friendly bankers and asked them if they'd collect the money for him, and they did, and they put the money into his account. He has not recorded that on his books yet because he didn't know they'd already done it. So who is wrong about the item, the bank or the books? The books are wrong. Should we add or subtract that to the book balance? We're going to add it because the bank has correctly recorded that as increasing my balance. We don't have it on our books yet. So what I'd like for you to do at the top, beside each item, we're going to write bank or books, and then add or subtract, and then we'll go and actually fill it in down below. So let's go to the book section, and under add, we're going to write a few words over there. I wrote note and interest collected by the bank. And then we're going to record the amount. Now we have two columns for the amounts. They are not debits and credits. There's nothing magic about them. Simply the details are going to go in the left column, the totals in the right, so that, again, just like in Chapter 1, if we're adding numbers together, they need to be one beneath the other with nothing in the middle. Bank service charges. The bank took $10 out of Barney's account. He wasn't sure what the amount was, so he doesn't have it recorded on his books yet. Who was wrong about that item, bank or books? His books are wrong. Should we add or subtract that to the book balance? We're going to subtract because the bank has correctly taken that money out of his account. Barney doesn't have it recorded yet. So let's go to the book side, and under subtract, we'll record the bank service charges. Barney made a deposit December 31st, about 4 p.m. Doesn't show up in his bank statement. Who's wrong about the item, bank or books? The bank. Add or subtract that to the bank balance. Add. Why? Because when it shows up next month, it's going to make his balance go up. What do we call that deposit he made that doesn't show on the bank statement? Deposits in transit. So we're going to add that to the bank side. Opie. Remember cute little Opie? Red hair, freckles. Just a cute little kid. Opie wrote a check to Barney. Barney deposited it, and it bounced. Now, Barney doesn't know that the check bounced, so he doesn't have an entry in his books yet. Who's wrong about the item, bank or books? The books are wrong. Should we add or subtract that to the book balance? We're going to subtract it because the bank has correctly taken that money out of his account. Barney doesn't have it recorded in his books yet. So we're going to go to the book side, and under subtract, we're going to write NSF check. Checks Barney wrote that haven't cleared the bank. What do we call those checks? You would think we call them checks in transit, but we don't. If the deposits are in transit, why don't we call the checks in transit? But we don't. We call them outstanding checks instead. It's the same concept, though, on the way. Who's wrong about those outstanding checks, bank or books? The bank. Barney knows about them, but the bank doesn't know about them. Should we add or subtract them to the bank balance? we're going to subtract them, because when they show up next month, they're going to do what? Make my bank balance go down. So we're going to show that on the bank side and subtract. We'll put that one in the far right column, because I happen to know in this example it is the only thing on the bank that I'm going to subtract. So there's no point in listing one item and then a total. Somebody else in Mayberry wrote a check, and those silly people at the bank took it out of Barney's account by accident. Who's wrong, bank or books? The bank is wrong. Should we add or subtract that to the bank balance? Add. Why? Because what's going to happen? Barney's going to call the bank, and next month the bank is going to put that amount back into Barney's account. So when they fix it, it's going to make my bank balance go up. So let's put that on the bank side under add. Well, I happen to know that that's the end of the bank side of things. So let's go on and finish up the bank portion. Notice we had a beginning balance of $4,000. We have two items to add. One is $540, one is $200. $540 and $200 is a total of $740. We're going to get a subtotal. If we take the $4,000 plus the $740, we get a subtotal of $4,740. We're going to subtract the $2,288, and we have an adjusted balance per the bank of $2,452. Now, there are two more items we need to consider, and these are errors that Barney made. Not the bank, but Barney. For the first one, a check was written for $275 for postage, but when Barney wrote it down in his books, he accidentally wrote it down for $257. What do we call that when we flip-flop the digits? A transposition good. And for reasons that make no sense to me, transpositions are always divisible by 9. So we have a difference of what, $18 here? Is this going to be an error on the bank or the books? The books. But now we have to decide, do we add or subtract the $18? Now, I don't actually have a place for this on your handout, so I want you just on the side or maybe the back of a page to write down a couple of things. First off, let's write down these words, the entry we did make. And we are going to jot down the journal entry that we made. Now, we put it on our books for $257. What account do you think we debited for $257? Now, I'm going to call it postage expense. So I debited postage expense for $257. And what do you think I credited for $257? Cash. That's the entry we made. Below that, I want you to write the entry we should have made. We should have debited postage expense, right? But we should have debited it for how much? $275. We should have credited cash, but we should have credited it for how much? $275. So if you'll write down the wrong entry we made and the entry we should have made, it's going to help us here, but it's going to help us 10 minutes down the road do something else also. That's the difference of $18, right? The books are wrong. We have to decide, are we going to add or subtract? What you think? Add or subtract the $18? I'm going to go for the subtract. Why is that? We really right now don't care about the postage expense account, do we? What we care about is the cash account. I credited cash for $257. I should have credited cash for $275. Crediting cash does what? Makes it go down. I should have made cash go down by $275. I only made it go down by $257. I did not make it go down by enough. I need to subtract then that $18 to make it go down. So when you jot down these journal entries, I then want you to think about how they impacted cash. In this case, we credited cash for $257. We should have credited it for $18 more. We need to make cash go down by $18 more. So we're going to subtract this on the book side. So under the subtract part, we'll put the error in recording the check then of $18. Well, if that wasn't bad enough, Barney's got another mistake. This one deals with the deposit. The deposit was really for $350. It is to record the daily cash sales. But old Barney put it on his books for $300. It was really for $350. He put it on his books for $300. Again, let's write down the words, the entry we did make. And tell me, what account do you think I debited in my entry? Cash. Good. How much do you think I debited cash for? $300. What do you think I credited in that original entry? Sales, which is revenue, exactly. All right. So I debited cash and I credited sales for $300. The entry we should have made. We should have debited cash, right? But for how much? $350. And yes, we should have credited sales, but for how much? $50. $50 difference, right? Now we have to decide, do we add the $50 or do we subtract the $50? What you think? We are going to add it. Why is that? We debited cash for $300. Debiting cash makes it go up. We made cash go up by $300. We should have made it go up by $350. We did not make it go up by enough, so I've got to add the other $52. So on the book side, I need to add an additional $50 for the error in recording the deposit. So we're going to list that under add. And that's our last item, so now it's the moment of truth to see how we did. We had two items to add. One was 1,030, one was 50, for a total of 1,080. We're going to take the 1,500 plus 1,080. Says I get a subtotal of 2,580. We had three items to subtract, 10, 118, for a total of 128. 2,580 minus the 128 gives me an adjusted balance per the books then of 2,452. Have we seen the number 2,452 before? Where do we see it? It was the adjusted balance per the bank. The adjusted balance per the bank, the adjusted balance per the book should be the same. What if they weren't? My piece of advice as to what normally I see is that students would add something that they should subtract or vice versa. For example, that $18 error in recording the check, what if I had added that instead of subtracted it? Well, it would throw me off by 36. So take the difference, divide by 2, and go looking for that number. Maybe you added something you should have subtracted then, or vice versa. The last part of the reconciliation is, if any item showed up as an adjustment to the books, that meant my books were wrong about the item. If my books are wrong, I have to fix them. And the way I fix my books is by making a journal entry. So we're going to make a journal entry for every item which is an adjustment to the books. We will not make an entry for any items which are an adjustment to the bank. Why is that? Well, two reasons. Number one, we don't work at the bank. We can't fix things at the bank. We don't work there. Number two, the items that are adjustments to the bank really will take care of themselves. The bank will take care of them. The outstanding checks should clear next month. The deposit in transit should show up next month. And the bank errors, when we pick up the phone and call the bank, they're going to fix them next month. So we're going to make an entry to fix every item which is an adjustment to the books because our books are wrong. If the adjustment was added to the book balance, that means I need to make it go up, and so I need to debit cash to increase it. If the adjustment was subtracted from the books, that means I need to make cash go down, so in my journal entry I need to credit cash. If the entry was for an error on our books, I'm going to suggest you do what we just did for those two errors, where we write down the wrong entry we made and the correct journal entry, and I think it will help you in figuring out how to make a journal entry to fix that. Let's go through some examples. How about interest earned on my account? Well, that's something I'm going to add to my book balance. I need to make cash go up. I'm going to debit cash, and my credit goes to interest income or interest revenue. How about the note and interest the bank collected for me? Again, we add that to our books, so I'm going to debit cash. For the principal portion, I'm going to credit notes receivable. For the interest that I earned, I'm going to credit interest income. How about the NSF check? Well, that's something that I'm going to subtract from my book balance, which means cash needs to go down. I'm going to credit cash. Well, let's forget about accounting for a minute. Let's suppose somebody writes you a check, you go to the bank and deposit it, and then you hear from the bank that that check is no good and they pulled that money back out of your account. Forget accounting for a minute. What are you going to do? Get mad? I get some violent answers when I ask that. Yeah, okay, I do. Call the person. That's a nice answer. That's a nice answer. Why are you going to get mad or call the person or hire a big burly man to go visit him at night? Huh? Why? They owe you some money. They owe you some money still. Now let's go back to accounting. What do we call it in accounting when somebody owes me money? Accounts receivable. So my journal entry for an NSF check is a debit to accounts receivable. Put a little star by that one because if students are going to miss something, that's what they usually miss. Now, I find at this point in the semester, sometimes my students start to get creative. And they start making up accounts that I didn't teach them. They make up an account. I see it on every test called NSF expense. Now, creativity is rewarded in some of your classes. They like creativity in English and all that. We aren't very fond of creativity in accounting. We like to tell you how to do it. We want you to do it our way, okay? So please don't make up any new accounts. Let's use the ones we already have. We're going to debit accounts receivable to make the asset go up. you're going to try to collect that money from them. How about bank service charges? Well, again, we have to credit cash to take that money out of my account. My debit goes to an expense account. Bank charge expense, bank fee expense, something of that nature. It's just a regular old expense, though. So if the item was added to the book balance, we need to debit cash. If it was subtracted from the book balance, we need to credit cash. All right, let's look back at our reconciliation. If you have your pages where you can actually put them side by side, it probably would benefit you to be looking at your bank rec as we do this, because we're going to make a journal entry now for every item which shows in our bank reconciliation as an adjustment to the books. The note and interest collected by the bank for me. All right, now we're adding that to the book balance, which means what? We need to make cash go up. We're going to debit cash. If you just write debit, put cash on the debit line, and let's leave the amount blank for right now, and let's fill in all the individual pieces for everything I need to add first. How about for the $1,000 principal on that note? What account do I need to make go down by $1,000? Notes receivable, very good. So we're going to credit notes receivable to make the asset go down. How about for the $30? What account do you think I should credit for $30? Interest, income, revenue, or earned. Remember, 3 words mean the same thing. Revenue, income, earned. Not receivable, but interest, revenue, income, or earned. All 3 mean the same thing. Now, the way your book does this and the way I'm going to do it on the handout is I'm going to make one big journal entry for everything that I add to cash. Then I'm going to make one big journal entry for everything that I subtract from cash. You don't have to do it that way, but that's the way your book does it, so that's what I'm going to do for right now. How about that $50 error in recording the deposit? Now, what I'd like for you to do, that's the 300 and the 350 entry. Look back at where I had you write down the entry we made and the entry we should have made. Do you see that, the 300 and the 350? By comparing those 2 entries, what account do you think I should credit for $50? Sales, very good. Why is that? Because I credited sales for 300. I should have credited sales for 350. I need to credit sales for $50 more. That's everything that I added to the books. I'm then going to make one debit to cash for the total, for the 1,080. Now, sometimes I get students who would rather make 2 entries right here, and that's really okay with me. They would like to debit cash for 1,030, credit notes receivable for 1,000, credit interest income for 30. Then they would like to make a second entry debiting cash for 50 and crediting sales for 50. If that's easier for you, it's fine with me. It means when it comes time to post to cash, you're going to have to do a little bit more posting. But if that's easier for you, I'm fine with it either way. Let's look at the items that we're going to subtract from my books on the reconciliation. Bank service charges is the first one. $10 in bank service charge. What account do we debit for my bank service charges? An expense, exactly. And I'm going to call it bank fee expense or bank charge expense. Either one's fine. I believe in your homework, if I remember correctly, they may call it miscellaneous administrative expense. It's an expense. If they don't have a specific account for bank charge expense, we'd have to use some sort of a miscellaneous account. Now, don't write this yet, but what account do I need to credit for $10? Cash. Now, do me a favor, though. Skip 2 lines. Skip 2 lines, and I want you to write credit cash. Leave the amount off for right now. We'll come and do it just for the total anymore. All right, back to the reconciliation. NSF check. Somebody wrote me a check. I deposited. It bounced. The bank yanked that money out of my account. What account do we debit for an NSF check? Accounts receivable. That customer owes me money. That customer owes me money. I'm going to try to get my $100 from that customer. And again, credit cash, but we'll wait till the end to get the total credit cash. Finally, the $18 error in recording my check. To figure that one out, I want you to look at the 2 entries you jotted down for the $275 and the $257. Comparing those 2 entries, tell me, what account do you think I should debit for $18? Postage expense. Very good. Why is that? Because I debited it for $257. I should have debited it for $275. I did not debit it for enough. So I had 3 items that I subtracted from the books. I need to debit bank charge expense, accounts receivable, and then my postage expense. I'm going to make one credit to cash then for the total. The next thing I want us to do is to see what the cash account in the general ledger looks like now. What was the balance in cash in the general ledger to begin with? $1,500. I want you to look now at the first journal entry we made. And what did that first journal entry do to cash? Debited it for 1,080. What did my second journal entry do to the cash account? Credited it for 128. So I had a debit balance of 1,500. I debited cash for 1,080. I credited it for 128. What balance do I show in the cash account in the general ledger right now? 2452. Have I seen that number before? Where did I see it? It is the adjusted balance per the books and the adjusted balance per the banks. What is my true cash balance? 2452. So when I show cash on the balance sheet, the correct number would be 2452. And that is my bank reconciliation.